Hey everybody, it is Ask Me Anything on Sunday afternoon at 2 o'clock with the Bright Homes Atlanta team. And today Shane is out trying to get a property under contract. So we have got our bestie, Susan Pryor from Benchmark Mortgage, and we've gathered together some mortgage related questions for us to grill her with. So without further ado, Rhiannon, what kind of questions do people have about lending and mortgages?
All right. So one question is, why does my lender need so much paperwork?
Yes, it does feel like it never ends. So when the crash happened, not too long time ago, back then we could do a loan with a pay stub, and there was very little documentation, and the laws changed. The lenders got a lot more conservative after the impacts of the crash. And so there are regulations by each entity that does lending. So Fannie and Freddie are the largest conventional lenders. And so they have their rules. And then FHA has their rules and VA has their rules. And it's just really not open for interpretation. You have to provide the information if it's requested. And so,
I always tell people, can I borrow $500,000?
Right.
Oh,
right.
You want to make sure I have a job? You want to make sure I got enough money in the bank? Like, that's why they're doing that. And some lenders are super disorganized about it and actually lose things you've already sent them. And maybe the file goes from one hand to another set of hands and they aren't talking to each other. Definitely with Benchmark, we don't see that. They ask for things once and they get it and keep it where it belongs so they can find it later and all the good things. So it's a little less painful when you do it.
Hopefully we're not asking you for something that you've already provided to us. But one thing that does happen is that we'll ask for something, and then something in that document will force us to ask another question, and then you'll provide that, and then that'll force us to ask another question. So sometimes it does feel like it goes on and on, but we try to anticipate as much as possible in the beginning, so that when you're just that one day, when you're getting everything together, is you have to be organized, and then beyond that, it's not so bad.
Should a buyer be worried about, should a buyer be worried about all the personal and sensitive information they're sending to you?
No, we are required to have very high security, both in terms of securing our networks and our laptops, as well as when you provide us information. Now, we use a secured portal for you to provide all your information. You don't want to email documents to a lender because there's really no way for email to be completely secure when it comes from outside of a company. So if I email my colleague inside the company, we can secure that. But when you're interacting outside the firewalls, you don't want your attachments rolling around out there in the Ethernet.
Right, exactly. Or wiring instructions.
Yes. Actually, one of my favorite attorney had a $112,000 wire fraud last couple of weeks ago.
Yikes, that's scary. Even when you're super careful, these guys are hacking emails.
They're getting more and more. Yes. So yes, when you send your wire, your money, you want to call whoever sent you the instructions and go over them verbally, so that you don't have any risk of wire fraud. But it's crazy. That part's crazy out there. So, but no worries. We will anticipate what you need. We'll hold your hand to help you figure it out. And even if you're not technically advanced, then we do a lot of FedEx or get-togethers. So.
Yep. Let me swing by and pick that up, right? And sometimes we help with that too. So.
All right. What should someone do to improve their credit score?
Very good. I highly recommend that you talk to a mortgage professional. If you want to buy a house in the next few years, you want to talk to somebody who knows what's important for a mortgage credit report. One of the things, so some people, it's not necessarily paying everything off, right? So some people will have old collections on their credit report, and they're like, I'm going to pay it. Sometimes if you pay an old collection, it actually hurts your credit score. So you want to work with a professional when you navigate that. Sorry, Carrie.
No, I just said that's crazy I mean, that
It
seems
is.
counterintuitive, right?
Yes, it seems counterintuitive, but it is true, because you're refreshing that account. That's if it's more than 2 years old, generally it's not impacting your score too much anyway. So
Gotcha.
medical collections can be sometimes, if you will go to the medical doctor and pay the doctor and then dispute the collection, sometimes medical collections will fall off if you go through that process. Anytime that you do pay off a collection, or something old, if you try to negotiate them to remove the collection from your credit at the same time you pay it off, that's a win. Sometimes just paying off a collection, it doesn't help, or could hurt you. But if you can get it removed as part of the negotiation, then that's a huge win. And then the other thing is that a lot of it has to do with available credit. So a lot of people just don't use credit, and so they don't have many trade lines, and you need revolving credit. So you need credit cards, and I know that's counterintuitive too, right? Like, I have great credit because I don't use credit cards, right? So you do need to have at least 2 revolving credit cards, and you never want to owe more than 30% of the available credit line. So it's a $300 card. You don't want to owe more than $100 on that credit card.
Gotcha.
So you basically charge once a month and pay it off right after you charge it, and that will make your score be great. And if you can't get a credit card because your score is bad, there's something called secure credit cards, where you give them a deposit and then they'll give you a credit card no matter what your credit looks like.
Gotcha. Sounds pretty complicated.
It is.
Like,
we're here for you.
Maybe call a lender and talk to them about
call Susan. Yeah.
And that lender's not going to be annoyed that you can't buy a house right now. That's what I think. Some people think, like, oh, I can't call them because I'm not business for them right now. But I think that's totally not true.
Yes, definitely not with us.
There you go.
All right. If the mortgage rate goes down after I'm under contract on a house, do I get that lower rate?
So there's something called a lock, and you can choose to lock your loan at any point after you have an address for your property. So you could wait and float if you think rates are going down and not lock in your rate, and then lock it in 7 days before closing. Or you could go ahead and lock it right away. If you lock it right away, conceptually, you're agreeing to take that rate, and then the lender's agreeing to insure you from any interest rate variability. So conceptually, you don't get that drop if it drops. Now, we do make exceptions to that. There are some, if it's dramatic enough drop, then we'll figure something out.
Okay.
So we're going to find a way to take care of you if it's us, but in concept, a lock is a lock.
You don't get to float it down. Yeah. How do you know if you should lock or not right now?
Well, the market is crazy. It's just in the last 2 weeks, interest rates have gone up more than 0.5 point. So it's crazy. I would lock. I always say lock. There's a whole lot more there's a whole lot more variability against you than there is in your direction almost all of the time. But and inevitably, you know, the loan people don't understand that interest rates are really they're traded just like the stock market. And so, like, one day last week, we had 4 enterprise changes for the day. So by the time I got off the phone with the client, the rates had changed pretty significantly. And so it was a game all day long. I had some of my competitors were just like, we're going to have to just wait till the market settles down to even call you back. And so there's enough volatility in the market that just get your pretty rate that's probably in the 3s right now instead of in the 2s. One thing to note, though, is that for some reason in our world anyway, the 15-year pricing is still amazing. Like, we did 2.49 for a client on a 15-year on Friday, and that was pretty good. Yeah,
absolutely.
There's not usually that big a difference between the 15-year and the 30, but right now there is.
Yeah, lately.
All right. Someone wrote in and said, I'm a veteran why wouldn't I get a mortgage with USAA?
So USAA is really a marketing company, and they spend a lot of money on marketing, and they do a really good job. But they're not part of the government. They're not sanctioned by the government. They're really just a marketing firm. And they're a marketing firm with a call center. So if you're a veteran and you call up to get a loan, you're talking to someone in the call center. And then every time you move on throughout that transaction, you're likely to talk to somebody else every time that you're dealing with the transaction. So it's, in my opinion, insurance is a good product potentially to buy in a call center environment, but mortgages really aren't. And you need somebody who's going to really understand what veterans experience, and are you want someone that your agent referred you to, because your agent is going to, that the loan officer and the agent are going to do everything to not let each other down, right? Which means you're going to get very well cared for. If you're just dealing with somebody in a call center and we don't even know how to get them on the phone, or Carrie needs something at 2 o'clock in the afternoon on a Sunday and we can't get anybody on the phone. So you want to work with a private lender who specializes in, a local lender that specializes in serving veterans.
And I'll brag on Susan that Benchmark does specialize in serving veterans and serving them at a really high level. Some of the stories you've told of some of the people you've helped, I think is really amazing and impressive. And I'm sure rewarding for you guys as well as the homeowners. So that's awesome.
All right. Should I put 20% down when I buy a house? If I don't have 20% right now, should I wait to buy a house until I've saved it?
That is a great question, because I still do talk to clients who think you can't buy a home unless you have 20% down. Almost extraordinarily few people buy their first home with 20% down. Usually that's if there's a family gift involved. It's very difficult to save 20% of housing cost.
That's right.
For that first one. So you can put as little as, well, a veteran can put 0 down. There is out in the rural markets, there's 100% rural development loan. But in the normal markets, you can have anywhere from 3% down for some first-time home buyer products, 3.5% or 5%. So I would highly recommend that you don't wait until you get 20% down, because you have to remember that housing prices are continuing to go up while you're saving. And so, if you could buy a house for $300,000 and put $10,000 down, and then that house goes up 5% in a year, that is a significant increase in the value of your home. And that now becomes sort of your down payment on the next house, is your
right. You've gained equity just by not waiting, right?
Yes.
And rates are so low. I think the combination of prices and rates, we talk about housing affordability. Housing affordability is not going to get better than right now.
No, it really isn't. And that because of interest rates, and we don't have a lot of inventory right now. Housing values are going to continue to go up as population growth goes up. And there's just so many influences in Atlanta of things that are increasing our population size.
Yeah. Awesome. We love everybody coming to Atlanta. Come on.
We need to build. We need to get those builders to build some houses, lots and lots.
Yes. We could get into all the things with that, but Rhiannon, let's do one more question.
Okay. All right, I'm going to ask the big one. Somebody emailed in. The number one thing we hear from people who are thinking of selling their home right now is, where would we go? A lot of our clients have been surprised that they can pretty easily pull off buying the new house first and then listing the old one. How hard is it to qualify for the new home without selling the old one?
It is very doable. It just depends on your debt to income ratio. So you do have to be able, there's 2 issues. One is you have to be able to qualify for both payments. And the second is that you have to have enough money to put down on the new house without selling your old house, right? So that's a situation where we might put 5% down. If you had some money, we could put 5% down on the new house and wait until you sold the old house. and then you could take the rest of your money and put it down on the house and have your payment reamortized.
Right, right. So I imagine if you're doing a huge move up, it might not be as probable because you wouldn't qualify for both those homes. But if you were doing, you know, a same to same, I think a lot of people are surprised that they can qualify for two homes that are about the same value as the home they're in right now.
You would be surprised. It's one of those things that, you know, you qualify for a lot more house than you want for the most part, right? And so you oftentimes, the house payment you're comfortable with, which feels like a stretch to you, we might be willing to lend you more than that. And so lots of times you can qualify for both payments.
You qualify. And because of how closings and mortgage payments work, you actually skip a mortgage payment on the new house, right? And so if you can get the old house on the market pretty quick, you may have 1 month where you pay both mortgages. But if we can time it right, you might not even have that.
Right.
Houses are selling so quickly right now. You can identify the new house and then get to listing the old one and not have to double pay.
Yeah. And we can even make it so that you basically skip 2 or almost 3 payments if we do it right. So
that helps with cash flow. Yeah. Because you've got moving expenses and all the other things going on too. So it can be overwhelming. But
I always say you don't want to put down your last dollar on your house, because you're going to need a lawnmower or something. You need some moving money, or there's something's going to happen. So
I mean, how many times do our clients move into a house and something breaks that very first weekend? I mean, it's home ownership. It happens.
It's inevitable. Yeah.
It's inevitable. But it's part of it. So, all right, we're going to let Susan get back to her Sunday afternoon. I bet you're taking applications and sending pre-qualification letters and all the things for all the buyers, right?
All the things.
All the things. And we're going to support Shane, who's out there with our buyers this afternoon. And you guys have an awesome week, and we will see you next Sunday, same time, same place.
Bye. Thanks, Susan.
Thank you.
Rihanna is taking off in her airplane.
Oh no, you can hear my computer?
Yeah. Okay.
What a prime time to do that.
It's subtle. Okay.